Everyone, Matt here. This is my first video in what I'm just going to call budgeting basics. These are videos that are just going to walk through the 5 steps that I mentioned in my first video talking about what is a budget. If you didn't catch that video, I have a link to it in the description here. You might want to start there just to get a better sense of what a budget is and why you're doing one, what are the benefits, those sorts of things. And then at the end, I went through just what I think are 5 really basic steps that you're going to go through. Well, the last one's not so basic, but um, generally basic sounding steps that you'll go through to get your budget started. And so this video is going to cover the first step, which is to make a list of your accounts and your current balances. So this is a pretty straightforward step. It's not anything that's going to tax your brain too much, other than trying to remember what bank accounts you have. That might be the hardest thing you have to do here. So in this step, you are going to literally write down all of your current checking and savings accounts. We'll just call these cash accounts. These are accounts that have spendable money right now. So you could go out and buy something and use this money right now, or you could go to an ATM and take money out. We're also going to capture your credit cards because you do spend from those. And optionally, you can capture your loans and debts. I say optionally because you can treat a loan or debt payment as just a spending, just a transaction. But a lot of times in a budget, it is useful to have an idea of how much money you have versus how much debt you have. So it is optional, but it's probably something you want to think about having included in there. But just to get started, you really just need your checking and savings accounts and your credit cards. Once you have those, you might have to go searching around for those a little bit. That's fine. But once you get them, you're going to confirm your current balance, and that it might be positive or it might be negative in the case of a credit card. And you can do that by logging into your bank's app or website. If you're still getting paper statements, maybe you could just use that, although it's not a necessarily a reflection of today. But in any case, you're going to try to get the actual balance of those accounts as it stands right now. You're not going to include any upcoming paychecks, even if you're getting paid tomorrow morning. Just don't include those. You're just looking at what you have right now. Doesn't matter if you went out and made a purchase today and it hasn't hit your bank account yet. Just get your current balances. That's what you need right now. If you're using an app like YNAB, also known as You Need a Budget, um, you can think about linking the accounts and that those will actually link directly with your bank and they will sync the current balance for you automatically so you don't have to go um, to the website or whatever. If you have a bunch of bank accounts, it might be easier just to do it that way, and then you know that you're getting the not only you're getting the most accurate current balance right now, but you're also going to get your transactions synced to these accounts as the days go on. It's not exactly when it happens, but at some point during the day or the week, it will sync those transactions over for you. So when we get a little bit later in budgeting, that can save you some serious time. So the goal of these steps are to just know how much spending money you have available today because that's what we'll be budgeting. So you're really just trying to figure out how much money do I have right now and what spending accounts do I have so that I can use these for the budget. So a couple of tips for this step, just some extra things to think about. Um, Number one is that your budget doesn't care where you keep your money. So sometimes people can get hung up on I have 12 savings accounts because I have one for my vacation fund. I have one for my car repair fund. I have one for maybe upgrading to a new car. I have one for, some expensive furniture I want to buy or something like that. Anyway, the budget doesn't really care. It just wants to know how much money you have. So whether the money's in one account, two accounts, or 20, it really doesn't make a difference. We're just looking at the rolled up total number that you have available right this moment. So just keep that in mind when you're doing this. That uh, don't get hung up on it too much. Just write them down, get the current balance, and we're just going to get a total of that. That's what we really need. So I already mentioned that you might have multiple savings accounts for different goals, and that's okay if you do that. That's a totally valid way to do it when you don't have a budget yet. But there's also this other thing where some banks are offering these like buckets or vaults, and it's just a little feature they offer where you can just have one savings account, but you can split your money up visually into different sections. So you can have a vault for a vacation, you can have a bucket for a new car, whatever you want to do. But those are actually treating it, they're technically the money's all in one account. So the best way to think about this, and it might be hard to do this at first, but whether you have multiple savings accounts or you have different buckets or vaults in your accounts, the budget's going to replace this mechanism. So you don't need to keep your money separated in banks. You're going to use your budget to separate that for you. You're going to assign money to specific spending categories or specific goals that you have, and that's going to take over this work for you. A lot of people have trouble with this. They like the system they came up with. They have the different accounts, they have the vaults, the buckets, whatever they came up with. And that's okay. If you want to stick with that, it's not a big deal. But you'll see as you start budgeting that you're going to be feeling like you need to keep the budget categories and these accounts or vaults in sync, and that's definitely not the case. You don't need to worry about that. The budget's going to have the truth. That's going to say the truth of where your money needs to be and what you're saving towards. So it's just something to think about at this point. And then to that point, the last one here is just once you get comfortable, you're going to probably consider, or at least want to consider, consolidating these cash accounts. If you are someone with multiple savings accounts, you will probably find that as you're budgeting, it's a deterrent to budgeting because you're tracking transactions for multiple accounts. And then I would see people that are transferring money from their checking to this savings account, that savings account, that savings account, and you have to, keep this all straight. Now, if you're just doing it on your own in a spreadsheet, maybe you have a system where you can make this really easy. But when you're using an app, especially, in my case, I use YNAB, so I know that that's a lot of work. It's going to be a lot of transactions that you have to enter or that have to sync over, and you just have to keep that all straight. And at a certain point, you just say, this isn't worth it anymore. It's not really doing anything for me. The budget tells me this anyway. So just something to consider. You don't need to worry about it too much now. You're just going to get your accounts, but it's just some things you want to think about at this step, just where things are going to end up later. So those are just some of the tips for now. I'm going to open up YNAB and I'm going to walk through what this would look like. Again, I'm using YNAB, but you don't have to. You can use any budgeting app that you want, or you can even try to do it without an app. You can just do this in a spreadsheet. You can do it on a piece of paper if that's what you want to do. That's probably not a long-term viable solution, but whatever method you're going to use, it's simply writing down your accounts and balances. So it doesn't have to be an expensive paid app or anything like that. But I'm going to show you in YNAB, and I'll just kind of talk through what this might look like if you weren't using an app. So we'll go ahead and do that. So, all right. So in YNAB, I just went ahead and created a brand new budget, and you'll see for the most part, it's just bare bones. It's almost completely from scratch. But there's a little bit going on here. So on the left side of the screen, this is where our accounts will show up when we add them. You can see right now it says that we don't have any accounts. You can't really make a plan or do anything without an account. The app needs to know how much money you have. But in the middle of the screen, this is where our spending categories are going to appear. So we're jumping ahead a little bit to the next step when we start adding categories and trying to figure out our obligations. But you will see that an app like YNAB is going to try to guess or at least give you a template to start with for things that you're probably going to spend money on because almost everybody does. So you see things like your electric bill, your cell phone, groceries, restaurants, all of those things will be captured in here. And of course, you will customize this as much as you need to make it fit your life. But for right now, we're going to focus on the left side of the screen here, which is where we're adding our accounts. And again, if you're using something else like a spreadsheet, you just make a row in a spreadsheet to simulate what we're doing here. So at least in YNAB, you have two main options when you add an account. So I'll go ahead and click this button here. And YNAB will prompt you to do it the simple way first, which is the long-term simple way, linking your bank account so that you don't have to enter things manually down the road. So everyone has their own opinion on this. If you don't like giving your banking information to a third party, that's totally fine. You don't have to do this. I do it because I personally feel like the convenience is worth it for me. I don't want to have to enter every transaction I ever make. I still do it sometimes. I will add manual transactions, but I do like that even if I want to enter the transactions manually, this will act as a check on what I've done. So when these transactions sync, YNAB is going to confirm that the transaction I already entered matches what's coming over from the bank. So I just like that as a bit of comfort that I know, okay, what I entered is accurate and everything's looking good. If you don't want to do this, And again, that's completely fine if you just want to take this on manually. There is a button down at the bottom here that says add an unlinked account. Again, if you're using a spreadsheet, everything you're doing is unlinked for now. So that this is going to simulate what you'll be doing. So you can say add an unlinked account and you can just give it a name. So I'm going to do this as my Wells Fargo account, and we'll just call Wells Fargo checking. In YNAB, it's going to ask you what type of account this is. So when you start, it doesn't have any idea what you're trying to add, of course. So we're really just going to focus on our cash accounts and our credit accounts. Those are the things we're focusing on. So this is a checking account. I'm going to pick checking. And then I can say, what is my current account balance? So because it's an unlinked account, the YNAB doesn't know what this balance is right now. So it will be up to me in this situation, just like if you're doing it on your own, to go and find that account balance and type it in here. So I'm going to go over to Wells Fargo. Okay, so I went ahead and logged in to my Wells Fargo account, and this is just going to tell me exactly what I need to know. So I have my checking account right here, and I have a current balance of $500. That's my available balance. That's the money I have available to spend. In the budget, I don't care about any transactions I've made before this very moment. None of them matter. All that matters to the budget is how much money do you have right now? And so I have $500. So I'm going to go ahead back into YNAB and I'll just go ahead and type my $500 in. And there we go. I successfully added an account. I'll click done. Now it shows up here on the left side. And in an app like this, I now have a register or a ledger, or whatever you want to call it, a place to enter transactions on this account. So anytime I spend from this account, I will have a place to add a transaction later. But as of today, all I care about is how much money is in there. And in YNAB, it's going to automatically put a starting transaction in that will have an inflow of the amount that's in that account, which is $500 right now. So it's going to put that in here. Okay, so I'm going to back out of this and I'm actually going to delete this account. I'm going to show you how we would do it the other way. So go ahead and delete that one. I'm going to click add account and I'm going to do it as a linked account this time. So again, if you're doing this on your own, you may not have this option, but in YNAB you do. So I'm going to click on Wells Fargo, which is one of the starter banks that's there for you to click. If you can't find your bank here, you can just search up at the top. So I could do that anyway. I could type Wells Fargo. But there's so many different options here. You'll probably find your institution. So anyway, I'll click on Wells Fargo, and it's telling me I've already connected this bank, I think, because it's in my actual budget that I've done this. But I'm going to just go ahead and say add a different account. Normally, you're just going to be taken to a screen that looks like this. It's going to ask you to log in. Sometimes it will have you do it directly through this box, or other times it'll just give you this button to go to the bank's website and log in there, and then it'll kind of work backwards to sync it into YNAB. So I'll go ahead and click log in, and then it will bring me to a screen that looks like this. And it's going to ask me to connect account information for all the accounts I have with this bank. Every bank's a little bit different. Some will do something like this. I know Chase does it almost the same way, where they'll bring up all your accounts and ask which ones do you want to sync. It separates them by cash and credit, so it's up to you. So in this case, I'm going to say yes. I want to sync my cash, my everyday checking account, which has the balance of 500. I could say, oh, you know what? That's great. It actually has my credit card that I have through Wells Fargo as well. I'll go ahead and click on that one. And then it will ask you a couple of questions down here about how much information you want to share. So I could just uncheck this and say I don't want to share this with YNAB, and I could even uncheck this too. I don't. They don't need to get my statements, so I can uncheck this information. And then I click continue. It will ask me to confirm this. I can read the conditions if I want to, and then just go ahead and agree to connect. I will connect my account. And then after this is done, it will say you're good. It will take me back to YNAB, and YNAB will do the rest. It will finish up syncing. And then when I'm done, we're going to end up with something almost exactly like when I did it manually, where it's going to have a starting balance automatically for me. But it will look relatively the same. So it's going to ask you just to confirm which of these accounts you actually want to create in YNAB. So the first step I was doing in Wells Fargo was saying you're okay to share this information with YNAB. So YNAB gets both of the accounts I selected, and I have one last option to include or not include these accounts. So even though I shared the checking and the credit card, I could choose to say I don't want the credit card in here. I just want the checking account. In this case, we'll just say I'm going to add this one, just the checking, So there you go. It's going to automatically pull over that $500 balance, and I can click on done, and we're going to end up almost exactly the same way we did before with an inflow starting balance of $500. That's it. You're going to repeat this process for all the different checking and savings accounts that you have until you have everything, all of your spendable cash in your budget. So that's going to be different from everyone. For me, I have maybe 4 or 5 different accounts I would consider cash that I would include in here, and a few credit cards. Other people may just have one bank that's they use for everything, and other people, like we talked about, might have a dozen different accounts if they're using, savings buckets, for example. So that's that. Now, if you sync the account, it does have a tendency to do something like this, where it'll just pull over the exact name from the bank, but that's not always the most useful thing. So you can usually edit this by clicking the little pencil, and then you can just go ahead and rename it. So I just name it like I did before, and you always have the option to unlink this account if you don't like having the sync transactions. You can unlink that. Now I'm going to add a credit card and show you what that looks like. So if I add an account, again, I'm going to get the same screen. But if I said I want to add my Wells Fargo credit card, I can do that. This time I'm going to choose credit card. And again, it's just going to ask me what's my current account balance. That's all it wants to know. Now, let's just say I had some spending on this account. I don't really. When we logged in, there was no spending on it. And it's honestly a credit card I don't use. So I would, in this situation, I would uncheck it and not include it in here because I'm just not using that account. Now, some people might say I will include it, even though it's dormant, because what if somebody does use it? What if somebody gets the number or something happens that I wasn't expecting? YNAB would catch that for me, which would be nice. But in this case, I just chose not to include it, but it's totally up to you. So for a credit card, let's say I had a little bit of spending and I have a balance of $341.11. Now this is going to be a negative balance because it's a credit card. So this is a balance I have to pay off. So I would enter it as a negative. So I'll click on next there and add that account. And now you'll see there's an outflow for the starting balance of $341.11. And that's how YNAB works. So an outflow is money leaving the account or being spent, and an inflow is money coming into the account. So a payment on a credit card, for example, or a deposit from your paycheck, or a check that you deposited, or cash you deposited, or a refund from a purchase. Those would come in as inflows in YNAB. Now, how you will handle this in a spreadsheet if you're doing it yourself is up to you. But this is what it will look like in YNAB. So this does a couple of interesting things when you add this. It not only creates the account and it gives you the starting balance, which is what we're looking for, but it also puts this payment up here. And this will, in YNAB, this is going to align with a spending category that's in your budget. So there's going to be a specific spending category called Wells Fargo credit card in the budget, and you will have the opportunity to assign money to this to pay the balance. So you'll see over here, it's not really available money necessarily. It's actually a payment you'll be making onto that credit card. So YNAB would do something like this for you automatically in your own budget in a spreadsheet, or wherever you're doing it. You would handle this a little bit differently, but you would come up with some method to say, yes, the credit card payment is part of my budget. It is something I pay month to month, so I do have to capture it. What you also notice is at the top of the screen here, this is in YNAB what's called ready to assign, which is basically just how much money you have. This is how much money you have available to budget. And what may look a little bit interesting to you here is that it's only including the cash accounts. So the negative balance from the credit card does not impact our budget because this did not get deducted from money we actually have. This is money we owe, but it's not money that's actually leaving our accounts right at this moment. So we still have $500 available to assign into our budget. And part of that money could be used to pay this balance off. So I could say, well, okay, great. I have 500, so I'm going to put $341.11. And now I have a payment that matches the balance. That means I'm going to pay my credit card off completely. And so, great. Now I'm ready to go. I have $158.89 now to assign to other things. We'll get way more into this later, but that's just something to keep in mind is even if you have high credit card balances and even if they're more than the cash you have available, that's not going to affect your budget. Because think about it, I could say, I'm not paying this all off. I'm only going to make the minimum payment, which is $50. That's all I'm going to put in here. And you can do that. That's okay. A lot of people do this. Uh, they don't make the full payment on their credit card. They just pay a certain portion of it. Now, the YNAB is going to tell you that it's underfunded and you're not paying off your full credit card balance. And of course, we're trying to eventually get there, that we will pay the full balance off. But it is okay to not fully pay it off. And so therefore, YNAB would not consider that negative balance on your credit card as taking away from your budgetable money. Um, okay, hopefully that makes sense. Again, you're really just trying to get a sense for what cash do you have? So checking and savings accounts, how much cash do you have available? What do you owe on your credit cards? And your credit cards will be used in the future for the budget because you will spend money from them. And then potentially you might even think about adding your loan accounts. So if I try to add another account, I might say car loan, and I can choose in this case, there's several different options in YNAB. So it has like a specific tool that will monitor your loan. So you could pick one of those, or you could just say other debt. It's up to you. But you could say that this is an auto loan. It's going to ask for the current balance. Say, okay, I owe $15,000 on this. My interest rate is 8%. And my monthly payment required by my lender right now is $350. And then it would create a loan account for you here. And again, this is not affecting your budget, right? If I go back to my plan here, I still have $400 available, exactly what I had when I went to create the loan. This loan doesn't take money from you. Of course, that's the reason you take a loan, because you want to keep your spendable money and pay it off later. And so that's how this will work. But it is useful to track this. It is nice that you could, when you make a payment and it leaves your budget, that it is going toward a loan that you have on file, and you can kind of watch that, minimize it. And if you're using a tool like this, then you can even play around with it and see like, oh, what if I paid a little bit more off? I could see what would happen there. So instead of making a $350 payment where I'm going to pay it off in 2029, what if I made a $500 payment? Oh, well, now I'll pay it off in 2028. So it's fun to do things like that. But ultimately, as far as budgeting goes, it doesn't really impact what we're trying to get started here, which is how much money do I have? How much money do I need? Okay, what's the difference and how do I want to prioritize that? So I know this was super basic, but this is the process you would go through. You're just going to repeat this for all of the accounts that you have. Once you get all of them, you're done with step one and you can move on to step two, which we'll cover in the next video. So until then, have a great day.